Hey there, it's Steve Lang with Lang Financial. You may know that your home is going to be one of the most valuable assets you're ever going to own. But did you know that you can actually refinance equity that's grown over the last number of years out of that home and use it for other purposes? Today, we're going to discuss 3 benefits to refinancing your house. The first one we're going to talk about today is credit cards and lines of credit. Let's take advantage of the lower interest rates and save on interest costs by consolidating higher interest loans. Because your mortgage is a secured loan, it may have a lower interest than other loans such as credit cards, lines of credits, or car loans. You will pay less interest, improve your cash flow, and pay off your debt faster. As for cash flow, doing a refinance allows us to extend the amortization out to 30 years if this is needed. We try to match your current amortization, but if we need more, we can get more. Most of the first-time mortgages on a house are limited to a 25-year amortization or less. You will also consolidate all your monthly payments into 1 or 2 easy monthly payments. Now, this is a budget, an example of a spreadsheet format to show how using a refinance to pay off some higher interest bills makes sense. This example is one I also use for anyone who is looking for a new mortgage. It will illustrate what the monthly payments are and see what their cash flow will look like after the mortgage is put in place. In this example, we've put the lines of credit and the credit cards into the mortgage, and you can see that it's lowered their actual monthly household payment. The second one is home renovations. Many homes have increased in value dramatically over the past few years. This equity can be used to finance renovations that might need to be done. Maybe your family is a growing family that needs a second bathroom like mine is. Maybe you want to upgrade your kitchen and make it look more modern. Or maybe you need some new shingles, a new fence, some hardwood flooring, or some new windows to increase the comfort and the value of your home at a very low interest rate. And of course, these cost money. You also might be thinking of getting into the rental game and increasing your net worth by owning more than one property. This is an excellent method of diversifying your investments. The rule in Canada for a rental property is 20% down payment. So we use the current equity in your current owner-occupied home to buy a rental property. Of course, have someone else pay off the mortgage for you. Now, there are a few things to know about refinancing your mortgage. The first big one is that in Canada, we're only allowed to refinance the property up to 80% of the appraised value of the home. This means that you will have to have had your own home for a bit of time to have the value increase, along with the mortgage payments lowering the amount owed on a home. Here's an example of a $350,000 appraised house. So we will be able to refinance up to 80%, which will be $280,000. For this example, if you have a $220,000 mortgage left on the property, you can use the $60,000 of equity for almost anything. You will have to remember that, of course, there's probably going to be break fees if you have a current mortgage already. So one of the things that we have to discuss is whether it actually makes sense to break that mortgage. So what we'll do is we will talk about if you're early in your term, late in your term, how much it's going to cost you, and make sure that we can actually make this work for you. Now, of course, some of those fees can be capped into the refinance and added into it. Now, marital separation. This is a different one-on-one situation where we would discuss it more. But with the marital separation, you can actually refinance your house up to 95% of the appraised value. Now, there's a lot to discuss in this. So as I said, this would be more of a one-on-one conversation we would have to have. Now, there are many other things that you might be wanting to refinance your mortgage for, such as higher education, maybe some medical expenses. Maybe you haven't paid your income tax for a few years. All these things can be paid off with a refinance in your home. So if you're looking for a mortgage, be it your first mortgage or a refinance, please contact me through my website, stevelang.ca, or give me a call and we can discuss the steps we will need to take to secure the best mortgage for you. I will be happy to work with you from beginning to end and make it the best experience possible. Please also consider subscribing to my channel to be notified when additional videos are released. Thank you and have a great day.